Hello everyone, and welcome to this presentation of how to identify quick momentum moves before they happen. Welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. Thank you for joining us today. For those of you who are new to my weekly presentations, we like to give out free education to everyone because we are an educational company. So that's what we're really all about. I know you've attended other presentations in the past where you kind of watch a presentation for a good hour and then at the end you don't really get the full enchilada unless you purchase a product. Well, we're going to have a product to advertise, and hopefully that you'll become a member of Specialist Trading to purchase at the end of today's presentation. But we're also going to give you a lot of free education so that you can start using it as early as tomorrow if you'd like, whether you decide to become a member of Specialist Trading or not. So, therefore, we are an educational company first. Even though we provide all our members with signals and with strategies in which to trade, we're more about empowering you with this information so that you'll be able to ultimately make the decisions for yourself. You won't have to rely on a signal service. You won't have to rely with corresponding with me. After a certain amount of time as my student, you will be able to spot and see these market moves as well as signals for yourself and be able to trade on your own reliance. Now, just to give you a little bit of background about myself, I have been trading for a total of 37 years. I first started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. And I traded through just about every market environment imaginable that you can think of. I traded through the crash of 1987, through the great bull market that ensued after that. I've seen straight up and straight down markets, sideways markets, flat markets, non-volatile and very volatile markets, and I've traded just about every technique and system and strategy that's known to man. I left the floor in the mid-90s to manage money, to pursue my own trading. After that, I was asked to be a director of education for a number of websites, and about 6 years ago, I started Specialist Trading, which just promotes and teaches all of the things that I personally use. So everything that I teach and give to my students are the things that I use in my daily trading. These are all things that I've accumulated in my 37 years. So this is why we say we're more about education. We give you all the tools, the information that you need, but we really want to empower you so that you'll be able to spot these signals and these market moves for yourself. So, before we begin, as always, we are required to show you our disclaimer, so I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance with some great techniques today. Remember, you can start using these as early as tomorrow if you'd like, but please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to say we have a fairly large crowd here today, and I know there's a lot of people that are new to my presentations. If you've seen me in the past, you know that I love to take any questions that you may have, but I like to wait to the very end of the presentation. We have a lot of great free information to give to you today, so I don't want to break up the webinar by stopping every couple of seconds to answer questions. So please write down and try to remember your question, and I promise I'll get to it at the very end of today's class. Also, before we begin, I'd like to invite you to follow us all on Twitter. You can see there's our handle there, at SPCLST. TRADG, our abbreviation there. We post a lot of great free information. We'll show you current signals that we're in. We posted a great signal in the Australian dollar a few days ago where we told all of our Forex members to get long, and we have a nice profit in that as of right now. So I invite you all to join us and follow us on Twitter, and you'll get a lot of free information there and know what kind of signals we're in. Okay, now as I stated, we are an educational company. I know a lot of people will say, well, Steve, I hear that you give out signals and you tell people what the trend is and things like that. Yes, I do, but we do that in terms of educating you because everything that I've learned, I try to pass on to all of my students. And why? Because I was in the same situation they were when I first started out. Contrary to what a lot of people may think, when I first started on the floor trading as a specialist, my first year was terrible. It was dismal. I couldn't make a dime. I would trade just the way everybody else did by trying to pick tops and bottoms, and I would have some great trades and possibly 4 or 5 great trades in a row, but then the next trade I would give everything back. So there was no consistency in my trading. There were a few other specialists on the floor that had been trading for a good 30, 40, 50 years who had been on the floor, who saw how much I was struggling, who came to my rescue and really turned my way of thinking around. I used to think that the more complicated you made your trading plan, that was going to guarantee you greater chance for success. But what they taught me was it's actually the opposite. The more simplistic you make your trading plan, that's what will give you a greater odds in your favor for achieving that success. In other words, my mentors taught me that It's the easiest thing in the world to complicate your trading, but it's the most difficult, but it's the most difficult thing in the world to simplify it. And most people love to add on layer upon layer of things to verify and to look at, different chat rooms to be in, different news services to watch, different TV shows or educators or presenters, I should say. But they really overcomplicate their trading. What we do at Specialist Trading, what was taught to me by my mentors, is to keep things as simple as possible. Most of our strategies and techniques have anywhere from 3 to 5 rules, and that's it. And the things I'm going to teach you today are extremely simple. In fact, I'm sure that many of you have already seen or heard of them before, but it's just that you don't know the proper way in which to implement them. So I'll show you that today as well, and then we'll show you how they, putting all these techniques together, how they formulate one of our most consistent strategies, which is strategy number 4. So we're going to share with you some great information, but remember, once again, my goal is to teach you how to trade with the Specialist Edge. The Specialist Edge is rooted in simplicity. And once you get that simplicity, you'll get that consistency which you're looking for. I know everyone's looking for that home run to make that big score, and from time to time, even our methods will get those. We'll achieve that every time, once in a while. But what we're really looking for is that 2 steps forward, 1 step back approach to trading. We're not going to sit here and tell you that every trade's a winner, but we're looking for 2 steps forward, 1 step back. That's our goal. All right. So once again, before we begin, before I tell you what you're going to learn today, remember, if anyone just happened to join us in late, if you have any questions, please wait till the end of today's class. The only question I'll answer right now is the most common question, most popular: is this being recorded? Yes, it is. So if you have to leave early today, don't worry. You can ask for a link to this recording. You'll see there, I believe in your chat box, there's a phone number as well as an email address. You can contact us and we'll send you the link to this recording, okay? But if you have a question about a technique or something I'm going to share with you, please write it down. We'll get to it in the last 10 minutes of today's presentation. All right, so let's begin. What are you going to learn today? What am I going to teach you? Well, I'm going to share with you 2 identifying techniques. These are great techniques for identifying trend and identifying the momentum of a trade. Extremely simple, but I'm going to show you how powerful these techniques are. Then I'm going to show you how these 2 techniques mold into probably one of our best strategies, which is strategy number 4. So really what you're going to be seeing are 2 of the very basic rules of strategy number 4, usually reserved for the members of Specialist Trading, but I'm going to share with you these 2 identifying techniques that make up 2 of the rules of trading strategy number 4. And then we're going to show you some examples of that, but then we're going to kick it up a notch and add a short-term trend identifier. This is another tool, it's another filter we can use, and then when we couple it on top of the consistency with strategy number 4, we have an extremely powerful combination. I'll show you some examples of adding this short-term trend identifier with strategy number 4, and you'll see how well it really works. In fact, I will show you some examples just from this past week. In fact, I'll show examples from today. All right, let's start with technique number 1. You may want to write these down. Remember, if you have any questions, please wait till the very end. Technique number 1 is how to properly identify trend. I know you all heard the trend is your friend. You must trade in sync with the trend. And everyone knows this. This is nothing new. The only difficulty is that there are 1,000,001 ways to discern what the trend is. And that's why most people have difficulty with this concept. Everyone has a different idea. Some people use indicators. Other people use the higher time frame to find out what the lower time frame is going to be. Some people look at news events. But everyone has a different idea, and they're all different time frames and in place with what you're trading. So that's why it's so difficult to get onto that road of consistency. Let me show you an example here. This is a static chart we're going to be sharing with you just for educational purposes. Now, someone looking at this right off the bat would say, well, Steve, there's actually no trend here. We're basically just going sideways because we go down and then we go back up and then we go lower again. So my indicators or my just off site tell me that there is no trend here. Well, at Specialist Trading, we believe we have the most simple but powerful tools for identifying trend, and this is the overall trend, and it's simply by adding a 50-period simple moving average, okay? And I don't care if you trade 5-minute charts, if you trade weekly charts, monthly charts, 4-hour charts, it doesn't matter. You must add a 50-period simple moving average to that chart. And then before you pull the trigger on whatever your strategy is or system is, ask yourselves, where is price in relation to that 50-period simple moving average? Okay, I'm going to say that again. You may want to write this down. Ask yourself, where is price in relation to that 50-period simple moving average? All right, and you have to ask yourself that, because if price is above the way we see here in this example, Well, that means that the overall trend is up. That's it. And so that means if the overall trend is up, you should only be looking to buy. Do you see how we're getting on that road to consistency and we're whittling away all this complication with our trading and just simplifying it as best possible? So that means that the overall trend is up. So that means we're never going to short if the majority of price is above the 50-period simple moving average, okay? Now, here's another chart. Once again, someone who is new to this concept would say, well, Steve, there's no trend here. Once again, we're just going sideways. We're going down, then up. There's no movement here. There's no type of trend movement or any momentum. So we're just kind of in a range. Well, no, we add the 50-period simple moving average. What do we ask ourselves? Where is price in relation to that 50-period simple moving average? Okay, price is below. So if price is below, the overall trend is down. It's that simple. Now, I know a lot of times people will say, well, Steve, I had a great trade where I bought below the 50-period and it worked great. Or I had a great trade where I shorted above the 50-period and it was a fantastic short. I'm not saying this will not happen from time to time. Remember, when I first started trading on the floor, this is the way I used to trade. It's that last one that doesn't work. That's where you give everything back. Remember, our goal is to be consistent. We're not trying to hit home runs. We're not trying to pick a top or a bottom. We're trying to be in sync with the trend and just ride it. And the way you get that consistency is knowing what the overall trend is. So if price is above, we're only looking for long setups. If price is below, we're only looking for shorting setups. Once again, I know a lot of you will say, that's it? How powerful is this tool? I mean, I've heard people say that 200 is a better qualifier, or I like to use a 20-period simple moving average. Well, I'm sure you've all seen in the news Twitter today. Twitter is really literally falling out of bed. It's the lowest it's ever been. And if you look at the chart, and I took this snapshot just about an hour before the close, you see Twitter's been going down for the last couple of months, 2 or 3 months. A lot of people have gotten hurt tremendously by purchasing the stock, and they couldn't believe that the stock, the fundamental news, everything was looking great for the company. Well, why did it go down? At Specialist Trading, we don't care about those things. Remember, we want to keep things simple. Don't overcomplicate your trading. The simplest thing you could have done was add the 50-period simple moving average. And this is back in February. And you ask yourselves, where is price in relation to that going all the way back to February? Price has been below. So since February, we're not long Twitter. There's no way we would have gotten hurt in this stock. The only thing we've been doing is looking to short Twitter, and we've had a number at Specialist Trading. We've had a number of winning trades with our strategies going short. Why? Because we are in sync with the market and the overall trend. Remember, from time to time, you will have these counter moves where you say, boy, I bought below the 50 and it worked great. But we're not looking at just individual trades. We're looking at consistency over time. I want all of my students and all of my members not to be trading for a couple of weeks or a year. I want them to be trading 20, 30, 40 years. And the way you get that is through a numbers game by applying the 50-period simple moving average. If price is below in this situation, you're not going to even consider buying. I don't care what kind of signal you get or what somebody says in a chat room or a trading room or what some trading guru says, you will not buy. You'll only look for shorting setups. In the long run, it will help you, and you'll be able to trade 20, 30, 40 years down the road. All right, that was technique number 1. Let's move on to technique number 2. Now that we know the overall trend, we want to look for a bar that closes in either the top or bottom 25% of its range, depending on its relation to the 50-period simple moving average. All right, so what do we mean by that? Well, if we look at a bar here, we're looking at the same charts we looked at. Price is above the 50-period simple moving average. So in this scenario, if price is above, we know the overall trend is up. This means we're only looking for bars that close in the top 25% of their range, as you see right here. See, all of these other bars didn't close in the top 25% of their range. They closed either lower or they closed just a little bit below that. But we only want the charts, regardless if it's a 5-minute time frame or a 30-minute or an hourly or even a weekly, we only want to look for the ones that close in the top 25. Why? Because this means when you see a chart that closes in either the top or bottom 25% of its range, it's giving you a tremendous clue as to which direction it wants to continue in. Okay? And that's what a great clue we're getting, not from a trading room and not from a TV commentator, but from the market. The market is telling us most likely we're going to go higher because I closed in either the top 25% of its range, or we're going to go lower because I closed in the bottom 25% of my range. Okay? So as we see here, these two bars closed in the top 25%, and the first one went up a little bit, but the second one had a nice move. Why? Because the market itself was giving us clues. Now, I know a lot of people, I've given this webinar in the past, and a lot of people have a lot of difficulty in understanding what the top 25% and what the bottom 25%. And no doubt, undoubtedly, it's going to be a question at the end. Let me just say right off the bat, whatever time frame you're looking at, whatever bar you're looking at, in this case we're looking at candlesticks. It doesn't matter. It could be open, high, low, close bars. When we say top or bottom 25% of its range, you simply want to take, we'll take a bar here. This is the very top of its range. In this case, it's the top of the wick. And this is the very low. So if you divided this by 4 separate but equal parts, the top quarter is where you want to see the closes, okay? So you take the extreme high and the extreme low, and the top quarter, if you divide it by 4, the top quarter is where you want to see the close, in the top quarter. If that happens and you're above the 50-period simple moving average, that's a tremendous indication that you're most likely going to go higher. Remember, these are the standard 2 basic rules of strategy number 4. So that was a buy example. Now that we can use this for a selling example. We're below the 50-period simple moving average, so now we want to look for shorting opportunities. This means we want to look for bars that close in the bottom 25%, such as this bar right here. So we close in the bottom 25%, and then look what happened. Once again, we're not concerned with news. We're not concerned with some economic number that's coming out. The market itself gives you all the clues you need to know. Trust me, I know when I was on the floor, I used to wait for every economic report that was coming out. I used to wait for the money supply. I used to look and see what all the earnings were going to be on the stocks, job claims, all those things. And guess what? It didn't make me any more money. In fact, I lost money trying to trade these things. My mentor said, Steve, don't confuse your trading by listening to these things. Take them with a grain of salt. If you're an investor, if you're looking for the long term, such as 5, 10, 20 years down the road, then yes, you need to know these economic conditions. You need to know about the stock or whatever you're trading. But if you're trading to hold things on for anywhere from a couple of minutes to a couple of months, there's no reason why you need to concern yourself with those. The elite specialists on the floor never concern themselves with this, so why should we? Okay, so we just showed you 2 of the basic rules, the fundamental rules of strategy number 4. Okay, so now you have just about half of what it takes to trade strategy number 4. I'm sorry I can't give away all the rules. It wouldn't be fair for the people that have paid thousands of dollars already to purchase this strategy, and then if I gave everything away for free. So I haven't told you about stop, entry, and ultimately exit points. But those are all in the course. I've told you about the basic setup. Now, these 2 setups I gave you, the 2 techniques I gave you, you can actually use this and apply them to your own current strategy right now, and you'll already increase your odds for success. Or you can devise and build your own strategy based off of them. But let me share with you strategy number 4. This is our most consistent strategy to date, and it trades virtually every market and every time frame. Who's it for? It's for all traders, from beginners to advanced. Strategy number 4 is traded in over 60 countries around the world, from hedge fund traders to people that have been trading out of their homes just for a couple of weeks. The rules are the same for everyone. Now, we also teach you advanced methods in the course, but the basic format is the same for everyone. All right? It's for traders looking to catch quick momentum moves. So if you're trading the standard format, you're in and out very quickly, maybe 5, 10 bars at the most. This can be 5-minute bars. It can be daily bars. All right? The intensity level from 1 to 3 is a 2. So this means if 1 is the most intense, meaning that you have to watch every tick, you can't leave your computer screen to go get a sandwich or go to the restroom, you can't, you have to be watching everything from the minute the market opens to the close, that's extremely intense. 3 is the least intense, where you can basically enter an order and walk away. Well, strategy 4 falls somewhere right in the middle, okay? So it's a really casual, very nice strategy to trade. It only uses 1 indicator. All right, now, normally I wouldn't share this with you, but I'll share it with you right now. The indicator is what you just saw, the 50-period simple moving average. That's it, okay? Because basically, we're looking for a specific pattern that goes back a certain number of bars. We can use this on any time frame, any direction, and the best thing is any market. So once you become a member of this strategy number 4 course, if you like to trade the Forex as well as the E-mini, guess what? Strategy number 4 works in both those markets. If you like to trade, monthly charts as well as intraday charts, strategy number 4 works in both those time frames very well. Lastly, our edge, what we try to instill in all of our traders, is consistency. Why is that? Because remember, when I was on the floor, I worked around possibly 200, maybe 300 traders on the floor of the exchange. And I saw things happen that I couldn't believe. I saw traders make, in a matter of days, hundreds of thousands, if not millions of dollars. And here's the important news that I want to carry over to this analogy here. I can venture to say that each one of those traders that made those tremendous amounts of money has ultimately lost it all and is no longer even trading. So it's not about hitting these home runs, because every trader I've known that's hit a home run has lost it all. Some have taken years to lose it, some lost it in a matter of days. But the traders who were able to be consistent, who had this two-step forward, one-step back approach, were the ones that are still trading, okay? And there's not very many of them. There's only a very few that left the floor who have this consistency. So that's what works. We're not going to sit here and tell you that every trade's a winner, but there is a large consistency to trading strategy number 4 based on the 2 techniques that I just shared with you, okay? So let's look at some strategy number 4 examples, all right? Some are older examples, but they're for educational purposes. And then I'll share with you some really recent trades. Okay, let's start off looking at stocks for all you stock traders. We look at HAL here. We ask ourselves, where is price in relation to the 50 period? Obviously, price is above, so we're only looking for buy signals. Now, with our proprietary add-on, that's our add-on tool, which automatically generates the up and down arrows, we see here that we generated a signal to go along on the 14th of April, just about a month ago, a little less than a month ago. So look what happened after that. As you can see, we closed in the top 25%, and here is the 50-period simple moving average. Just a couple other rules in terms of entry, in terms of if you want to enter aggressively or conservatively, if you want to place conservative or aggressive stops, and if you want to exit using the standard format or write it as much as you'd like. All right, let's look at Twitter. Now, this was on the 22nd. Remember, we looked at the chart that was updated up until today. But we look at going back to the 22nd one just about a few weeks ago. And we see here, obviously, we're below the 50-period simple moving average, the way we told you. And we get a sell signal that's automatically generated with the red arrow here. And then look what happened. We all know what Twitter's been doing. Now, this was only going up until the beginning of May. The first week of May so far, it's gone even lower. So you could have stayed longer if you'd like. If we look at COP, this is going back to the first week of April, about a month ago. We're above the 50-period simple moving average. And we close in the top 25%. And this is a great example if you want to stay in the trade much longer. Now, obviously, if you took the standard format, you would have exited early somewhere here and taken a quick point or two. That's the basic standard format of trading strategy number 4. But we show you ways in which to stay in this trade. You would have been in this trade all the way up. And it's the same thing with TGT, which is the beginning of the year. Now, we had 2 signals flash here telling you that you had a really high probability downward move in TGT. This was at the very first couple of days of the new year. And look what happened. You could have taken the standard exit and covered your short very quickly, or you could have stayed in the whole while and made a really, really great trade shorting TGT. Now let's see how this transfers over into the E-mini, because the same concept which works on daily bars can work on 1,000 tick bar charts. All right, this is going back to the 8th of April, just about 3 weeks ago. We see here that we started out in the beginning of the day, roughly the first hour of trading here, and even though price closed above, our close was below the 50 period, so that's a valid signal to go short. And look at the nice moves you had here. And then you had another signal to go short. Now look what happened once we consistently closed above the 50 period simple moving average. The system automatically generated buy signals. And this was just going up until the first couple of hours of the day. You could have quit after the first couple of hours of this really great trading day and said, well, thanks, that's it, that's great. These were all signals that our intraday traders of strategy number 4, of course, could have taken. How about a 5-minute chart? This is going back a couple of weeks to the 11th, where the market was below the 50 period the entire time. And as you can see here, these were all signals to go short. I believe there was only one signal that didn't work well, and that was this one right here. Had you gone short, you would have probably been stopped out, but then gotten a second chance to go short towards the very end of the day. So this is what happens. There's consistency. In other words, you have a number of ones that work and then 1 or 2 that don't when you have small losses, and then it gets back on track again. How about going to the 28th? This was just last week in the E-mini. This is looking at another 5-minute chart. As you can see here, we don't have the 50-period moving average plotted, but this was an automatic generated signal to go long. So you could have had a nice signal there. And then when the trend changed and when price was below the 50, we automatically got short. And you can also trade this on higher time frames. This is going on a 60-minute chart going back to the first couple of weeks of April. as we see, price was flirting above, but remember, we want to go short if the majority of price is below and if our entry where we close is below the 50 period. It's still valid. All right, this is a more aggressive way to trade. It's still a valid signal, so the add-on generated a valid sell signal to go short on the 10th on a 60-minute time frame, and look what would have happened. This was the very first week or two of April. All right, how about for all you Forex traders out there? Well, Forex traders usually look at larger time frames. So here's a daily chart of the euro dollar going back to last year. You can see all these buy signals that were generated. And I think there was only one signal here that would have lost money or had a very small gain, and that was this one right here. But this is where we talk about consistency. You would have had basically 4 winners and 1 loser going back in this 2 to 3 month time period. And then if we look at the Australian dollar, which was headed straight down last year, look at all these signals to go short. Each one of these was a winner. And once again, you can see the same exact things happening. We're going short. Why? Because we're below the 50 period. And look at all these signal bars. They all close in the bottom 25% of their range. Now, there are a couple of other rules that need to be met. Once again, that's for the members of Specialist Trading, but it's extremely, extremely simple. After the first few weeks, you won't even have to rely on the add-on on the up and down arrow. You'll be able to spot them for yourself. Excuse me. Now, here's a signal that happened just a few days ago, or I should say a few months ago, in the euro-yen. Someone looking at this would say, well, there's no real trend happening here, Steve. I don't really see anything, so I'll stay away from the euro-yen. And if you looked, the 50 period isn't available here. It was much lower, but for the sake of showing this chart, trust me when we say that price is above the 50. So someone looking at this would say, well, you know, I went to a chat room and the guys here that follow Forex say don't do anything in the euro until there's a clear breakout of trend because there's no trend yet. That's not true. Because of the 50 period simple moving average, we know that we're already in an uptrend. And the add-on generated a buy signal on the 28th of March. So this was our setup to go long, and then look what happened. In the next 3 days, you would have made roughly about over $1,000 trading one contract in just 3 days. So we've showed you some consistency, but from time to time this will happen. Because remember, we don't want to sit here and cherry pick everything with you and tell you that everything works. Here's SNDK. Now this is a buy signal that was generated going into February. We're above the 50 period. We close in the top 25% of our range. So this is a valid signal to go long. So we're all excited about this, and this looks great that things are going to be working out. So we decide to go long SNDK. We purchase the stock, and then look what happens. We're stopped out with a loss. And so, you know, we figure, well, boy, maybe I just purchased this. I'm not too sure about this. I'm not too sure what Steve said about these rules. Maybe I'll just sit on the sidelines for now. And so another signal appears about 2 weeks later. You decide not to take it, and this one goes straight up. Okay? So how can we improve or increase our odds for success? Because there are going to be times when you're going to have some losers or it goes into a little slump. Is there a way to add a filter so that we can at least kind of stay out of the majority of the time out of those losing trades and only focus on the ones that have a high success rate? Well, yes, there is. This is by adding the PET-D. It's the Primo Early Trend Detector. It's something that was introduced to me on the floor, and when I first started using it on the floor, I had to calculate it by hand. It's extremely simple, but it's too much calculations to do if you're looking at intraday charts. You had to only use it for daily bars. And it worked tremendously. It really helped me. My mentors taught me this, and I had used to calculate it and kept a list of it for all of my stocks that I traded. I traded upwards of 50 stocks. Now, you know, we're talking about 25, 30 years later, with the advent of programmers and high-speed computers, we have been able to make this a proprietary color bar algorithm. So there's no calculation on your part at all. So what happens is that we simply color the bars. When you see a series of green bars, this means that a short-term uptrend is in place, such as you see right here. And conversely, if you see a series of red bars, this means that a short-term downtrend is now currently in place. Remember, the 50-period simple moving average was for the overall trend, but the PET-D is for the short-term trend. So now we have a double whammy. We can increase our odds because now we're not only in sync with the overall, but we're able to see if we're in sync with the short-term trend. So how can we apply this to trading strategy number 4? Well, we only want to trade strategy number 4 buy signals that are colored green. So when we automatically get a signal to go long, we have to make sure that that bar, that setup bar, is green. So let's look at SNDK again. If we look at it before we added the PET-D, all right, we see that, okay, these are our two signals. One didn't work and one did. But if we add the PET-D, automatic trend identifier, we see that this first signal was generated red. So we would never have taken it. We would have sat on the sidelines and said, I'm not going to take this signal. And a good thing we didn't, because it didn't work out. And then you would have waited for the next signal, which was colored green. And guess what? SNDK took off. So how would we apply this if we're going short? Well, we just reverse. We're only going to trade strategy number 4 sell signals if they're colored red, because the short-term trend is in agreement with our setup. So if we look at this older example of ROST, we see that we're below the 50-period simple moving average, and our add-on automatically generated sell signals, all these sell signals. But the first, couple of them, 2 or 3, didn't do anything. In fact, this one would have been a short-term loser, this one would have lost, and this one really went up sideways. You most likely would have gotten stopped out. So if we add the PET-D, we see that each one of these was colored green. Remember, we can only take short signals if they're colored red. So we would have totally stayed out of going short any of these until we got to this last one. So this was the only one we would have taken, and look what happened. You see how the PET-D gives us this confidence to take the trade. Not only do you have the high consistency with strategy number 4, but now you have the confidence of knowing that you're in sync with the short term. All right, so let's look at some more examples now, coupled with strategy number 4 and then applying the PET-D as well. Here's CVX going back to the middle of April, about 2-3 weeks ago. You see here that we're kind of splashing between green, then red, then green, then red again. And then at this point here, the automatic add-on flashes a buy signal, and the bar is green. So we have confirmation to take the trade in CVX. And look what happened. I know this is an expensive stock, but you could have easily bought calls in this. This is we're not an option class, but we have a number of students and members who only trade options, and what they do is once they get a signal, they just purchase the calls or the puts, depending on which direction the signal is. Here's another example in Facebook. Okay, this is going back to the beginning of March into April. Now we had a buy signal here that was colored green, so it's a valid signal to take, and you could have done all right. Not really a great signal. You could have made a little money, but it did go in your favor. If you were trading the standard approach to Facebook, you would have exited and made a little money. But then we had another signal generated here. Before you get in, you notice that it's colored red, so you're not going to take the trade. All buy signals must be colored green with the PET-D. And look what happened. Okay, so you're patting yourself on the back and saying, boy, thank goodness I stayed out of the trouble there. And now, as you see, going into April, another signal was generated to go short, but this time it was colored red, and it went in your favor. How about CRM? Well, we have two signals generated right here. Both are colored red. So we would not have taken this if we're applying the PET-D to this. Now, this one would have worked a little bit, but it really kind of faded away, and it didn't really give you a lot of gains. This one, as we see, went straight down, so it's good we didn't take it. It would be more conducive to take the next two signals that were generated, both red, and as you can see, the market went lower. How about the euro-yen? Okay, if we look back at this again, we see that coming into the end of March, beginning of April, we had a buy signal generated. It was colored green, so this is why we would have taken this one. We showed this example earlier in the presentation. Now, a couple of weeks ago, a signal was generated to go long, but it was colored red, so we would not have taken this signal. And as you can see, it didn't work in our favor if you've been keeping up with the euro-yen. And then if you want to trade even a different time frame, we've showed you short-term time frames, average time frames. We can go out to a longer, such as a weekly or even a monthly chart. Here's a weekly chart of the British pound. Now, you can't see the 50 period because it's below this chart, but for educational purposes, trust me, it is above the 50 period. Price is above. So this means we're only taking buy signals, and each one of these signals that was automatically generated by the add-on was colored green. So you could have taken each one of these and had a very nice gain. Each one of these would have netted you roughly $2,000 or $3,000 per signal. Here's a 60-minute chart of the E-mini. This was just a few days ago. This was last week, actually. Coming into the 28th, we see here that a sell signal was generated to go short. Why is it a valid signal? Because it's red. So we can go short, and look what happened. The next two bars went down much lower. Now, it doesn't look like a lot, but that's roughly, we're talking about 15 points or $700 per contract. So that's not a bad move here in just a couple of hours. Now, As we see here, coming into the 29th last week, another sell signal was generated, but this one was colored green here. So we don't want to take this trade on the 29th. That was just last Tuesday. And as you can see, it was good we didn't because the market went higher. Now coming into a week ago, last Wednesday, we see here that another signal was generated, and that one would have worked out. You can even apply that to a 10-minute chart. Let's say that you got a buy signal on the 60. I know a lot of people like to trade on a lower time frame based off the higher time frame. So once you saw that that buy signal was generated, you could have gone to a 10-minute time frame and taken all of the buy signals on a lower time frame. This 10-minute chart coincide with that very same day, those upward signals on the 60-minute chart. All right, now let me show you some current signals here. When I mean current, this is this last week and even as current as today. We look at FISV. Now this is coming into the beginning of May here. We were below the 50-period simple moving average. This is a more advanced trade here for you advanced traders, but an automatic signal was generated. Why? Because we closed in the top 25% and we closed above the 50-period simple moving average. Now remember, the basic rules are you want to see the majority of price either above or below. But if you sometimes for advanced traders, as long as the signal bar is generated and closes above the 50, it's still valid. And as you can see in this case, it was also colored green by the PET-D. So this was giving you more than enough confidence to take the trade. So you would have gone long FISV roughly on the 29th of May, and look what happened, 4 points in 4 days. Okay. How about the dollar yen? Well, once again, we're below the 50-period simple moving average, but coming into the end of May, or end of March, I should say, beginning of April, we automatically generated a buy signal. Okay. Remember, the majority of bars closed below the 50. But the signal bar closed above, so it's still valid. This is a more aggressive way of trading. We wouldn't, suggest this for our beginning traders, but this is still a valid trade. And also, coupled with the PET-D, it gave you the confidence to take the trade. And look what happened: 100 pips in the next 3 or 4 days. So you could have exited that and taken a nice profit. And look what happened: the dollar yen fell out of bed quickly, so that's okay. You took your profit using one of our proprietary exit techniques, and then just about a week ago, we had another signal generated to go long, okay? Now this one didn't work out. Colored green, we want to go long, so it didn't work out. So we're sitting here and we had one losing trade. The good news is we're talking about consistency. We got a signal to go short just about 3 days later, so you would have taken that and made all the money back. So this is what we talk about consistency. You had 2 really good winning trades and 1 losing trade. You probably would have made about 100 pips on this, or $1,000 just trading all 3 of these signals. And then lastly, let me show you what happened today. If you traded the E-mini on a 5-minute chart, the way many of us did at Specialist Trading, you would have known that the entire day on a 5-minute time frame, we were below the 50-period simple moving average, okay, for the entire day. So what did that tell us? We were only looking for short signals. And so the market was much lower today, and we had a great day. Now, the only way we would have lost is if we tried to pick bottoms. Maybe we would have caught one here or there, but why, once again, why swim upstream when you can? It's more conducive to profits if you swim with the current at your back. So here we see that we got automatically generated a sell signal, and the bar was red. So this gives us the confidence to take the trade. We're in sync with the PET-D, and then look what happened. 4 points immediately to the downside. Now, as the market continued, we bounced again. We got another signal to go short. It's colored red, and this time 8 points to the downside. And then lastly, we had one more signal about noontime, and we could have made another couple of points. Now, obviously, we're not going to squeeze the exact highs and lows out of every trade, but we teach you ways to generate as much profits as possible. You can take the standard approach, which is quick getting in and out, and take your profit and leave, or you can stay in much longer using our advanced exit techniques or trailing stop techniques. So this was today, and this was the way a good number of our members traded today. So let's recap before we go into question and answer. We shared with you 2 identifying techniques: the 50-period simple moving average, which I guarantee will really increase your odds for success if you apply this simple technique. All you have to do is plot a 50-period simple moving average on any bar, on any time frame that you watch, any market. It doesn't matter. So a lot of people say, well, Steve, I trade intraday. I like to look at a 20-period. Or Steve, I trade monthly bars. I like to look at a 200 moving average. We have found over time that the 50 works the best in all markets. So in other words, you cannot, it doesn't really help to use a 200-period moving average on a 5-minute time frame. And it doesn't help that much to use a 20-period moving average on a monthly time frame. But the 50 seems to trans over well on all time frames and all markets. That's why we use it, okay? So ask yourselves, where is price in relation to that 50-period simple moving average? If price is above, you'll only look for long setups. Please never short if price is above. I know you're going to be tempted. I know you go to some chat room or trading room where they say you got to short something, but in the long run, you'll end up, it's a recipe for disaster. You'll end up losing more than you made. It's similar, that type of trading is similar to the slot machines. It's a gambling mentality, because if you've ever gone and played the slot machines, you'll know that they give you this false sense of security where you think you're actually winning. So over time, you'll get these small little winners. But if you look at your pocketbook over time, you'll see that you really haven't made any money. In fact, you're losing. That's the same way when you trade against the 50-period simple moving average. So this is a numbers game. We want you to get that consistency, and the only way you can do it is by only taking buy signals above the 50 and only taking short signals below, and that's it. And then we also want to look for bars that close in the top or 25% of their range. And why is that? It's because when you see a bar close in the top 25% of its range, it's giving you a tremendous clue as to which direction it wants to continue, okay? We're not relying on some trading guru or some guy on TV. We're relying on what the market is telling us. Remember, I used to rely on all these outside sources to tell me what to do. And my mentors finally taught me this. They said, Steve, quit relying on outside sources and learn how to listen to the market. That should be the only thing you should listen to. So that's why at Specialist Trading, we don't believe in chat rooms or trading rooms, or we don't believe in that because they're more of a crutch. You'll use them as a crutch, and you'll try to, mimic and copy the traders in the room rather than finding your own niche for trading. So we try to give you all the tools and information, such as we did today, so that you can rely on yourselves ultimately and become a part of the process. So you put these two identifying techniques together, and you come up with the basis for strategy number 4. All right? These are two of the most important rules of strategy number 4. The others are just the stop placement, entry, and exit. And those are really basic rules. The most important ones are the ones we just shared with you. And I'm sorry I can't divulge those because, as I said earlier, it wouldn't be fair for the people who spent thousands of dollars who already purchased strategy number 4. Now, strategy 4 is great, but as we showed you, from time to time we will have some losses. So how can we increase our odds for success? By simply adding our short-term trend identifier. That's our proprietary tool, the PET-D. What it does is it's a color bar tool. If the majority of bars are green, then a short-term uptrend is in place. If the majority of bars are red, it simply means a short-term downtrend is in place. So coupled with the 50-period moving average, you now have the overall trend, and with the PET-D, you have the short-term trend. When you add these two together with a really consistent strategy, well, you simply get a powerful combination. That's the beauty of these two things together. I use these on a daily basis. I use these today, and they really, really help me. So if I could just take a few moments here, I'd like to invite all of you to take advantage of a great attendee special we have, and I want all of you to become members of the strategy number 4 and the PET-D course. We're combining these because they have such a great impact, and they give you this higher level of consistency. These are two courses combined in one, and usually we sell these separately, but this is a tremendous deal. In fact, I want to show you something, how well this works with something that was just about 3 months ago, but to tell you how well they work even in the face of news that people think is what controlling the market. Because at Specialist Trading, once again, we don't rely on any news. I used to rely on the news all the time as a trader on the floor of the stock exchange until my mentors told me, don't waste my time. Unless I'm trading something for 5 or 10 years, there's no reason to worry about the news. Here's something that came out in USA Today in February about Tesla. It says Tesla shares hit new high as Apple rumors swirls. Okay, shares of Tesla Motors hit a new high Tuesday as investors continue to react to news that the electric cars maker CEO met with Apple's acquisitions chief. So a lot of people are really bullish on Tesla, thinking it's going to get bought out. And this is when the news came out. Okay, so a lot of people who rely on that information to empower them, they say, well, I only get long or get short depending on what the news tells me. We'd have purchased it, Tesla, if they wanted to go long, or maybe purchase some options right here. But if you were a member of Specialist Trading and of the strategy number 4 course coupled with the PET-D, well, you would have seen that we had 2 signals months before any of that information came out. Here was the first signal in the first couple of weeks of January to go long. Why did we go long? Well, we had the confidence because the PET-D was coloring it green. And here was another signal at the end of January telling you to go long. and it was also colored green. So we knew months in advance that you should be long Tesla. Before any news came out, before any rumors about the meeting with Apple acquisition chief, it doesn't matter. The stock or the future or whatever you're watching, the Forex currency pair, is telling you everything you need to know. This is what was taught to me. It's a lot simpler to follow the market you're trading than to follow all these outside sources. If these outside sources work so well, if all the conventional wisdom and everything tells us these are the things you have to focus on, a lot of overbought, oversold tools, a lot of news events, a lot of trading room and chat rooms, a lot of watching and reading of what these trading gurus are telling you. If they work so well, then why are roughly 80% of all traders losing money? Okay, so you have to ask yourself, we're focusing on the wrong things. Another thing I want to share with you is that you can also use PET-D separately from strategy number 4. So let's say you purchase the combo deal, but you say, Steve, do I have to always use it with strategy number 4? Can I apply it to anything else? A number of our members have told us about how great this works on a longer term basis. Let's look at a chart. If we really want to talk long term, let's look at an S&P chart going all the way back to 1994, going back about 20 years, okay? And if we look here, we see all the peaks and valleys that the market has given us in the last 20 years, from going straight up to 2000, and then we had the internet bubble, the crash, and then we just fell straight out of bed down to 2003. We firmed up again, and then in the banking crisis fell out of bed, and we've been going up ever since. So what if you, for your portfolio, or your long-term trading, could have some type of tool or something that could at least keep you in the markets when it was going up and keep you out of the markets when it was going down on a long-term basis? Well, all you have to do is add the PET-D, and look what happened here. Remember, we're looking for the majority of bars. Now, we see the majority of bars were colored green all the way up. Sure, from time to time you saw one red here or so, but we want to see at least 2 or 3 consistent bars with a consistent color before we change. So we could have been long the market the entire way up and then gotten out here roughly in 2000 and missed all of this downward move. Then once we saw about 2 or 3 bars colored green again, we would have jumped back in, rode it all the way up to 2007, and exited early in 2008 and missed all of this downward move. Then we could have gotten back in 2009, 2010. Sure, we have a couple of black, or I should say red bars here, but we needed to have about 3 or so, and we were in the market the entire time. Now, wouldn't you love to know when we get about 3 more consecutive red bars and you could be out of the market entirely? So this is the beauty of the PET-D. You can use it in accordance with strategy number 4 in a long-term type of trend identification, or you can use it to any strategy or method you're currently using. It really will give you that level of confidence to take the trade. So once again, we're offering this special deal. These 2 courses would normally run you upwards of $2,000 to $3,000 to purchase separately. Okay, we discounted them tremendously down to $19.95 as a combo. But for all the people in attendance today, we're discounting them even more for the next couple of days down to $14.95. You get both of these strategies, instant course access, so you can start learning everything in the next 10 or 15 minutes if you like, once you sign up. Detailed video instruction. We teach you all the entries, exits, and stops, what I didn't go over today. And remember, once again, we also teach you advanced entries, exits, and stops, signal alerts, weekly video. This includes the add-on that ultimately just generates all of the buy and sell arrows, so you can use those as a learning tool, and then access to my personal email address. Remember, if you bought these separately, it would be close to $3,000. We discounted them down to close to $2,000, but we discounted them even more for this attendee special down to $14.95. The best thing about this offer is that we give payment plans to all of our interested people. So if you're interested in purchasing this, but you can't meet that $14.95, you can work something out with one of our trading consultants today, and we can put you on a monthly or even a weekly time plan if you'd like to have a payment plan. So we're willing to work with you. We just want you to get to that level of consistency. You've seen through this presentation how much attention and time I give to detailed instruction. We're really about teaching you things. Ultimately, I want you to take these tools and then run with them on your own. You can be with us as long as you want. You're lifetime members of Specialist Trading, but it's more about having you have the power to empower yourself. So let's go to the question and answer portion. I'm sure a lot of you have some questions, and I thank you for holding off. Remember, if you want more information, you can contact our sister site, which is Pro Trader Strategies. They promote and monitor all of our individual strategies, such as you just saw, and you can contact them, any one of their trading consultants, at trading@protraderstrategies.com, or you can call us directly at area code 310-598-6677. Okay? Let me open up the question and answer box once again. I'll try to answer them in the order they were given. Let's see. Ralph is asking, hello, Stephen. Are you showing us one of these days something what you would have about scalp entries? I trade tick charts for entry, and I try to hold the second 50% for longer after taking profit after 10 ticks with the first 50%. If you have something to teach, I'm interested in buying. Well, Ralph, we teach you ways, in different ways in which to exit in the course. So that all comes with the course. We teach you ways in which to hold on, methods similar to what you're saying. We teach you methods in which to move your stop to unchanged, but it's on a proprietary technique that you have to meet all the requirements of that before you can move your stop to unchanged. We also teach you different ways in which to exit trades at different levels. All this is in the course. So yes, you can talk to one of our trading consultants. This is all included in the advanced section of strategy number 4. Hajid is asking, is this recorded? Yes, it is. It's our most common question. You can contact the information you see there below. More information, either email us or phone us, and we will send you a link to the recording. Let's see. Will this be recorded? Yes. I just logged in. What is the setup criteria for the signals? Well, I can't give you all of the criteria. Once again, we said this before. It wouldn't be fair to the people that paid over $2,000 for just strategy 4 alone, and that didn't even include the PET-D. But what I did give you was a proper setup. If you're going long, price must be above the 50 period simple moving average. Okay, your close must be above the 50 period simple moving average, and you must see a bar that closes in the top 25% of its range. Okay, those are the 2 basic rules of strategy number 4. Once again, I can't tell you about stop placement. I can't tell you about entries or exits because that comes in the course. But we go over that in detail. We give you a number of ways. We give you the standard format for entry and exit and stop placement, and then we give you advanced placement so you can choose and pick which one best feels comfortable with you. This is where the teaching comes in. This is where the education comes in. Okay. Yes, you can get the link simply by contacting the information where you see under here, where the email address or the phone number. Rick asks, does this only work on Forex? No, Rick. I just showed a number of examples. I showed you the Twitter example. I showed you the CRM, as well as the SNDK example. I showed you the E-mini examples. In fact, I showed you a 5-minute chart of a lot of the trades I took today in the E-mini. So you see it works in virtually every market and in every time frame. And remember, one of the things a lot of people are always asking, they say, well, Steve, I'm very interested in this, but what type of charting software do I need? This can be applied to NinjaTrader. You can use this with TradeStation. You can also apply it with MT4 or with Metastock. And that's both of these. That's both strategy number 4 to get those automatic arrows, buy and sell arrows, as well as the PET-D. It will automatically color your bars either green or red. Let's see here. Ralph asks, what is the shortest time frame the PET-D works? Well, the PET-D, Ralph, works in every time frame. It's just the method that you're currently using. So in other words, if you're looking at a scalping technique, you're going to see the bars going back and forth from red to green, red to green. What we like to see is some type of momentum, or some type of pullback, or some type of kind of a consolidation, and then we want to let us know that the PET-D hasn't changed color. It hasn't changed, even though it may be pulling back or consolidating, it's still telling us that the short-term trend is still up or the short-term trend is down if you're going short. And that's where you get the confirmation from that. But it works. I mean, I think the lowest time frame I've ever used it in is 250 ticks on the E-mini. We have many people using it on 1-minute time frames, other people using it on 100 tick bar charts. So it really is up to you. But it works fine. We've had really a lot of success with it. And one of the things also I want to state, we've been talking about this because we've had such success with the PET-D. We're thinking about possibly by this time next year only licensing this. Okay, so you have to only be able to get it on a type of licensing possibly every 3, 4, or possibly 6 months. So you're going to have to come up with a different payment each 4 months. If you purchase it right now along with the strategy number 4 course, it's yours for good, for life. So this is also another great pick up right now at a great, great special deal. Rather than have to pay, over and over again every so many amount of months, you can have it for life and it's yours. And you can apply it with any strategy, any technique you like. Okay. Catherine asks, how many other strategies are in the program? Well, the course, the strategy number 4 is a strategy in and of itself. Okay, there are different ways in which to implement it, but it's basically one strategy. Within the PET D course, you have 4 different trading techniques, and basically they're high point entries. And we show you how to use the PET D to enter, because remember, the PET D is not a strategy. The PET D is a short-term trend identifying tool. So you can't, it's like having a strategy based off of trading a moving average. We're not going to trade a moving average. You trade the bar charts. So we're not going to trade the PET D. We trade the charts. So what I do is share with you 4 different techniques that you'll see with the PET D that are very, very high consistency trading techniques, and those come in the course. We also share with you in the PET D course a way to use it for stop placement. So it's another great technique that we didn't even discuss today. You can use the PET D, even if you don't want to use it for your entries, you can use it simply as a stop placement. Once you see that the bar changes a different color, you can either get out or you can place a stop somewhere below the market. So it's a great, great tool. It can be used in many different ways. Charles, hello Charles. He asks, does the slope of the 50-period moving average matter if the 50 is sloping down? Is still a valid signal? Hi Charles. Yes, this is a discretionary, and this is one of the things I teach in my course. Especially in the beginning, if you're just beginning trader to strategy number 4, you want to see the slope of the moving average trending upward. So if you get a buy signal, it will help you if you have a nice upward sloping trend to the market. You'll have a little bit more momentum in your favor. Now, is this to say that all signals should be that way? No. I just showed you a couple of signals where they weren't in that. We just closed barely above them many times, and they were still headed lower. But that's for the more advanced traders, okay? But if you're just beginning, we always suggest, and this is with any strategy, so you can use this on what you're currently trading as well. This is an educational technique. If you get a buy signal, which is above the 50, you'll have greater odds for success if the 50-period moving average is sloping upward, a nice accelerated slope upwards. Conversely, if you get a sell signal to go short and price is below the 50, you'll have a little higher chances for success if that 50 is sloping downward. Okay, these are great techniques. Thanks, Charles, for that. Doug asks once again, what charting software is required for the PET D? Well, as you see here, we have it, I believe, in the one of the answers. I'll say it again, though. You can apply PET D to TradeStation, to MT4, to Metastock, and to NinjaTrader. Okay, so we're working on other things, but basically those are the standard platforms, the main platforms that people use for trading, and it works fine just on any one of those. Okay. PET D, how is the green or red color determined? That's a good question, John, but unfortunately, remember, as I stated, the PET D is a proprietary color bar tool. We're not going to give away that information because we've had success with it. As I stated, we may be licensing this by the end of the year. The only clue I can give you is that it is based off of momentum. So we're looking to catch momentum. That's why we have this nice short-term trend. And it's something that I used to identify by hand in a handheld calculator on the floor of the exchange, but now I can do it simply with the programming of the color bars. But it's a proprietary tool, so we don't want to give the information. The one thing I can promise you, I have been using this for a good 20, 25 years, and I've never had to update it. In other words, once you become a member of the PET D course, we're not going to say, well, we're going to charge you an extra for an update. We've changed it and we've optimized it a bit, and now it works even better. I've never done that in 20, 25 years. I still use the standard form of this, so we really don't see that coming in any way, shape, or form. The PET D, once you get it, most likely is going to stay that way for good. Okay? Todd is asking, would I download the PET D indicator to my current trading? Yes, you simply download it, and once you switch it on, you have the option to either keep the PET D on or off. Once you put it on, it'll automatically color code the bars either red or green. Another question that's commonly asked is people say, well, I use candlesticks. Does this work with candlesticks? Yes, it does. I showed you a couple of examples with candlesticks where it did work, where you saw the candlesticks were green and they were red, so it will work perfectly. Jillian is asking, the bars that we see the signals on are already closed when the signal appears, yes? So we would get in on the next bar. If you're using a standard approach, yes, but we show you advanced ways where you don't have to, okay? And that comes in the course as well. If you're using the standard approach, yes, you get on the next bar. If you are using a more advanced way of trading it, no, you don't necessarily have to, and I can share that with you in the course. John asks how the PET-D is determined. I just answered that. Ralph is asking, does it work with Infinity? If you can use your Infinity broker data through NinjaTrader, then yes, it does, if you see here on the right, okay? Gordon is asking about whether when it's installed to the computer to paint the bar green or red. Yes, that's basically what it is. Once again, it works on MT4, Metastock, TradeStation, and NinjaTrader. Let me see some other questions. Any questions, and also any questions about discounts, any questions about platforms or technical assistance or things of that nature should all be addressed to our trading consultants. As you see here, that's the trading consultant email as well as a phone number. Anything that has to do with education, such as how do I trade it, what are the signals, where's my entry point. Once you become a member of the class, you simply email me and you get my private email address, and I answer you as quickly as possible. Now, sometimes there is a backlog. The other day it took me a day to answer a few emails because I had so many questions. But many times I'll answer you within the same day. So remember, once again, once you become a member, if you have any technical issues, have trouble uploading or have trouble finding it or just how to do it, you contact our trading consultants. If you have a question concerning actual trading or something in the course that you didn't understand, then you contact me, and all your questions are answered extremely quickly. Lorik is asking, is there a money-back guarantee? With our trading philosophy, Lorik, there is no money-back guarantee because everything that I've gathered in my 37 years is exposed right there in the course. In other words, you're getting everything you need to know. And as we see here, as we've stated many times, you can't unlearn the education. So you have it already. This is the same things. These are the same education and techniques that I use. So, many people, we've had trouble in the past where many people share them. They have such great success and they want a money-back guarantee, but now they know the techniques and then they share them with a number of their friends or trading buddies. We feel that this is the right thing to do. I'm giving you 37 years of experience in education, and you can do a Google search and see all the people that are satisfied with our products and everything that we've put out. Also, you can see the amount of detail I give to education, the sincerity in that I'm really trying to teach you how to trade. Even if you don't become a member of our course, the things we give you on our weekly webinars can hopefully take your trading to a higher level. So even if you decide not to become a member, we're sharing with you all of this free information in good faith. So we ask that once you purchase it, it's yours, and you're a lifetime member, and any questions you have or you just have a difficulty in understanding it, we'll be with there every step of the way. Therefore, there are no guarantees or any type of refunds. Okay? Ellen is asking, what is my Twitter name? Okay, Ellen, you can write this down. It's SPCLSTTRADG. Okay? And once again, if you have trouble locating it, you can contact us and we'll send that to you again. Okay? And yes, this was recorded. This is being recorded, so don't worry. You can contact us. The only thing I would suggest is that if you are really serious about taking your trading to the next level, take advantage of this offer. I'm really not, we're not trying to, do a sales job on you. We are traders ourselves at Pro Trader Strategies as well as Specialist Trading. I use all of this that I taught you about, and everything that I educate my members on, I use in my daily trading. So there's nothing that I'm not currently using myself. If you want to come along and become a member, we really encourage you to take advantage of this great special we're having. Once again, if you purchase these separately after the deal, it would cost you upwards of $3,000, and I'm not expecting you to spend that much money, but we wanted to offer this as a combo because we've had such great success when we see these two things are combined. But we realize how expensive it can be, so we dropped the price during our other webinars down to $19.95, but we've even dropped it more just for a couple of days only down to the $14.95. But please remember, if that's still too difficult for you to meet, we have payment plans. There are a number of people who have been able to trade all our methods because we work with you and have dropped the payments to really low so you can meet your needs and pay a small minimum amount each and every month. So don't worry about it. If you don't have that full amount, we will work with you and do our best to have it all set up there for you. Last question I'll take is from Ralph. what is the best market to trade it with? The crude oil or CL? Well, there is no best market in my opinion because it works great in every market. I mean, I just gave you examples of the Forex market. I gave you examples of the E-mini, and I gave you examples of stock market. And these are all great examples. There are going to be times in each one of these, even the crude oil, where it will go into some type of sideways or a slump or a drawdown. That's okay. We teach you ways in which to stay out of it when you use the PET-D. So this is a great technique regardless of what market you're in. Okay, we're not going to promise you that it's consistently winners. Each trade is going to be a winner. No, but we're looking for that two-step forward, one-step back approach. That's why I traded. This is what turned my trading around roughly 25, 30 years ago, and this is what I'm trying to instill in all of you. Okay? I want to thank you so much for joining us today. Yes, this is being recorded. Simply contact us at the information provided on your screen, and we will send you the link. But if you really want to take advantage of that special discounted offer with the payment plans, it's only running for a couple of days. So I look forward to all of you becoming members of the PET-D and Strategy Number 4 course, and I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.